This conference will now be recorded.
Okay, good afternoon, everybody. It is Sunday, August 7th, 2022. This is the weekend Canslim Growth Stock Investors Update from the Greenville Eastside IBD Group and the Stockyard Meetup Group. This is Greg Morton, and here's our standard disclaimer. Educational purposes only, not recommending any stocks or securities to buy or sell. And as we know, all investing has substantial risk of big losses. You want to learn first and only then invest. So today we'll look at the Impactor like we always do. What do we see this past week? Constructive action or destructive action? My hint is sort of a bit of both, it seems. Follow through day, gaining traction, sort of. I'm going to talk about, will the real follow through day please stand up? And then our educational meetings, real briefly update those and a change in date. So the Impactor, as O'Neill teaches us, this is the most important letter in Canslim, as 3 out of 4 stocks are going to follow the general market direction. So per O'Neill and IBD, we want to diagnose, we don't want to interpret, we don't want to predict, we don't want to hang our hat on, is this a bear market rally or is this a real full-blown rally? The key word is rally. And so that's what we want to focus on because that's what we're in right now. So we look at 3 things to decide how heavy we want to be in this market and how we interpret the market. Actions of new leaders, still seeing some improving like we did last week. Enphase is holding up well, but then we also see some getting hit near or at the 20% profit goal. Actions of stocks owned, still lagging for the year in the group teaching portfolio. It's hard to get any traction. Market pulse, distribution day count, price and volume on the indexes, and the color and book tracking. So let's hop out of here and take a look at those things. Actually, starting over in MarketSmith. So here we are on the NASDAQ. Here's our follow through day, which had the asterisk beside it. I'll come back to that. This was because that happened on the Russell rebalancing day. It would not have been a follow through day except for the massive volume that came in the last 5 minutes or less of trading due to the annual Russell rebalancing. So that's why I kind of have the 2 asterisks with it. Here's the subsequent follow through days marked in orange. Moving average lines, the 3 of them are stacked back in the right order, 10, 21, 50 day. We're still below the 200 day, so pretty far below that. And I think we have 8 days above the 21 day. So if we get 2 more days, the power trend will turn back on in the MarketSmith model. Volume tapered off a little bit. Friday was a down day, but volume was down, so that was good. So still seeing some improvement, but also running into some resistance. And how far are we above the 50 day? Yeah, 8.7%. So normally when they get about 6 or 7% above the 50 day, we'll see, a pause or a small pullback, even a good market rally. We're early in this rally, whatever kind of rally it is. So it can go a little bit higher as far as extension, but that's still, 8.7 is up there. So it may be we get a pause, doesn't mean things are going to roll over, doesn't mean things are not going to roll over. S&P 500, again, at least we have 3 moving average lines stacked in the right order, getting some space between them. NYSE, same thing, did come back to the 10-day, 21's just coming back through the 50, so not quite as strong looking there. Dow looks similar, all 3, stacked right, and you're getting a little bit of white space between each one, so that's nice. Still have that 200-day way up there. Russell actually looked better than the other indexes Friday, so it's actually up while most everything else was down heavy early on that strong job numbers and just had decent higher range closes. And the S&P 600, same thing, 3 moving average lines stacked in the right order. So the indexes are pretty much moving together. That's good. We're not seeing divergence between them, which we did see earlier. So we just keep an eye on that. If we go over to the coloring book, I haven't filled in any data for Friday, but one recent change is we do have now 11 buying days and 9 selling days in the last 25-day window, going back to this orange block. So some of the selling days have been dropping off, but that hasn't happened a long time. This hasn't been green. You have to go way back. It tried to get green there and there. It only lasted for a couple of days, but it's just red, 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 red. So that's showing us as some more hard penny distribution dominant tape, as Mark Minervini talks about. Here's our subsequent follow-through days are marked with the S. Here's the follow-through day with the asterisks. So it was on all three indexes, but it was due to that Russell rebalancing volume, as I said. And so there used to be a TV show a long time ago where they would interview three guests. At the end of the show, it was, well, will the real person stand up? Because two of them were imposters, and one of them was the real, not too famous person, but they were trying to identify who it was. And it was pre-internet and everything else, so it was a little bit harder. So maybe, I'm just throwing this out there, I'm saying I'm right, not saying I'm wrong. Maybe the real follow-through day was right here on July 19th. And maybe we're still earlier in this trend than we thought. We did have a follow-through day all 3 days on all three indexes. So maybe that was the real one instead of this one back here with asterisks, because this one closed below the follow-through day low, had a lot of weakness early on. Just throwing that out there, that could be one perspective. And the other thing, right after this one on the 19th, we did start having some breakouts where they were, back here after this follow-through day, there's no breakouts, no breakout, 5, 6, 7 days. And then this one, starting the second days after that, you got Lantheus, and then WWE came in, and then Sedge came in, Enphase came in, even though Sedge has since fallen apart on earnings, but it's just a little more constructive action. So just something to think about. There's not a right or wrong answer, but I'm sort of leaning in my mind that this may have been the real follow-through day on July 19th, and we're not even 4 weeks. We're only a couple weeks into it. So we'll see what happens. Go back over here. Wait, let me see if there was anything else I needed to say. No, war's still going on. Light distribution, 0 days on the NASDAQ, 1 on the S&P 500, 2 on the Dow. MarketSmith School still at full exposure, I think. I'll have to check and see if it went up even higher than the 5, but 5's 100%. Still having net new highs on the indexes. Again, I've got Friday's data to fill in, so I'll have to double check that. So yeah, that's about it on the coloring book. So let's go back over here. Group teaching portfolio, still down 12% for the year, only 43% invested. That's going to go down. Halo has earnings Tuesday after the close. I can't imagine it having a cushion. The rest of it may even get stopped out before then or voluntarily sold. So that's going to be gone. So we'll be even less percent invested unless something else, ANET gives us a way to add some or something else happens. One small short put in there, so you can see what it's doing. So not much progress this week. In fact, digressed this week. So let's go back over here, looked at that, talked about the real follow-through day. So the new growth stocks, that's the problem. They're not getting much traction still. Like the indexes are doing well, but the new growth stock leaders aren't. It's kind of beaten down stocks are leading, and then old big cap, Apple, Microsoft, Amazon, we're seeing money flow into those, it looks like. So some areas that still look good, solar stocks, of course. We see potential in medicals, particularly including the biotechs are showing a little strength. So sometimes that happens early in a new rally. Chip related, this is also legislation aided. We're seeing some strength there. I'll show you in just a minute. And oil and gas, is they going to grab another leg up? Those are harder for me. They're tied to the commodity price too. Our gas this past weekend in Greenville, South Carolina, we were down to $3.29 a gallon at Costco. A lot of other places, $3.49, $3.59 in that range. Costco is always normally the cheapest around here. So we have seen some strong drop there. So EPS season, this one's a lot better than last season. Disappointments are still severely punished. Roku got slammed. Shop, Teladoc, and Twilio this week got slammed. So I still think it's very important to be looking for new leadership. Look for viable gap ups. Enphase worked. SolarEdge got creamed. Lantheus was weird, gapped up and then got hammered and then sort of fought back, really wide bar week this week. We have another massive EPS week ahead as we're wrapping up. This will be the last really full, very heavy week. So I'll be going through those in my weekend routine to see if there's any setups in there that perhaps could be viable cap up candidates once they report. Of course, last EPS season, we had virtually zero viable gap ups. SQM was one. There might have been one more, but it was very few. At least this season, we've seen Enphase, which looked nice, and a couple others that we've talked about. So current market view, still a green light, proceed with caution and discipline, no chasing, honor your written sell rules, and adhere to Canslim stock selection criteria. Bear markets are unforgiving, downtrends are unforgiving, while strong bull markets overlook, cover up small mistakes. And it doesn't seem like we see the small mistakes being covered up yet. So we'll be looking for that. So same slide as last weekend, still green light, but just being very careful. It's probably, everybody's got to make their own decision on percent invested. The group teaching portfolio was what, 42% or something. I think I showed you on that slide. So it seems like that's, 40 to 50% seems about the right range. And if the market can make progress and the holdings can make progress, then that can be increased. But everybody's got to make their own decision. So areas of strength, I just pulled out of the newspaper the full industry group ranking. Highlighted in yellow, medical. Obviously, we're seeing a lot of those, particularly within the top 40, really goes down to number 57. There's a couple, scattered lower. Hospitals, they're sort of a different animal anyway. Supplies are sort of a different animal. So overall, medicals are looking good. And then I said semiconductors, we're starting to show some strength. So you can see those in blue, moving up, not many at the lower end of things. And of course, solar remains number one. And I just realized, I think there's just one solar industry group out of 197. So all of them, all the stocks are in that industry group. I can't remember how many total there are, but you can pull it up in MarketSmith and look at that for yourself. And then this is in the paper once a month. So funds that have been top performing funds over the past 36 months. So these are recently highly ranked funds based on their recent 36-month performance. These are their buys that come out of sort of the last reporting period. So this data does lag, but again, here, I should have been consistent, but I use red for medicals, blue for the semis. So you can see some money flowing in those. I didn't highlight the oil and gas, but there's still some of those, and see a little money flowing into software. So software, that's in one way sort of a little bit inflation proof, because they can just make more software without a whole lot of supply chain issues or other things. So maybe it does something. And then I still have in here, still watching this, why is QT really not started, or why isn't it proceeding on schedule? The Fed has no close, from the Emperor has no close. So they said it starts June 1st. It was supposed to be $30 billion per month in balance sheet reduction and $17.5 billion per month in mortgage-backed security reduction. That was supposed to last for 3 months. And then in September, these numbers were all supposed to double. So we now are in the first week in August. So we are 2.25 months in. So as of the data reported as of August 3rd, which is reported the next day, they're reported on Thursday at 4:30 p.m. So far over the 2.25 months, they've cut $40.4 billion from the balance sheet. So they have this one picked up this past week, but it's not. It should have been a little bit more than 60 billion. Sorry, I forgot to put that in there. Should have had another quarter week in there. But mortgage-backed securities for June, July, and the first week in August are up 10.1 billion. So on the balance, so overall, if you add it all together, the 40 cut plus going up by 10, we only have 32.2 billion cut versus it should be a total of 111.25 billion cut over 2.25 months. So only about 29% overall, if you look at both of them together, and I think it's fair to look at both of them together, 29%, they're way behind on that schedule, and maybe they'll catch up by the end of August, and then they can still start to double in September, because that's what their minutes say they're going to do, and that will continue, for months. It's just not a couple months. They haven't set an end date, but it's not just like, oh, it doubles in September for 1 month. No, it doubles every month, starting in September, and then it'll be the same figures in October, November, December going on. So we'll see if they hit those targets. So our monthly online meeting, I am going to shift our next meeting to the 23rd instead of the 16th. You can register at the Stockyard Meetup site. There's a national IBD meetup they're doing on Saturday the 20th, and I'm going to be participating in that. So it'd be nice to have one of our meetings right after that. So I switched the date. Tuition for the monthly meeting is $12. You get recording, slide deck, links to webinars, articles that come up during the meeting. If you're a first timer and you go register at the Stockyard Meetup site, I send you the prior month's meeting, all the links, articles, etc. And then prior classes, people may be interested in those. We spent 3 months teaching writing your own set of personal sell rules, spent sort of 2 months here on complete weekend routine, how to do that, how to build a tiered watch list, how to evaluate the best of the best, and pick the best of the best for your first tier watch list. So those can be ordered. Prior meetings are $15. You can email me at this address. The meetup sites, so Greenville Eastside IBD meetup is the official one with IBD, and then the Stockyard meetup site, you can just search them on meetup.com as a Stockyard, where you can register for meetings. You can follow me on Twitter, and of course, if you're watching this, you're on my YouTube page, so you can like and subscribe to that. So that's it. Hope everybody has a great weekend routine. Keep an eye on the market. Those new leaders, kind of look for that emerging and keep an eye on it. And I'm out of here. See you next weekend.